Hello, and welcome to the Stock Market Starters YouTube channel. Today, I want to talk about the basics of fundamental analysis and look at some of the numbers and some of the key ratios that people look at when considering investing in new stocks. Now, I'm going to be using some of these same ratios, some of these same numbers to look at my investment opportunities in upcoming weeks. And so I want to talk about them, kind of run through what the numbers are, talk about what they mean. That way, you guys have a good understanding of what's going on. So hopefully, it'll be beneficial to you. And we can go ahead and see what we got. So let me share my screen and we'll hop on in. All right. So today we're talking about the basics of fundamental analysis. And, the first question I think is what fundamental analysis actually is. Why do people do it? The real trick here is, or the key here is that, looking at a company's financials from financial reports that they put out every quarter, usually, to determine how strong the company is and to decide if the stock is a good investment is sort of the idea of what fundamental analysis is, right? It's about finding the actual data that the company releases and saying, hey, are you guys making money? Are you set up to continue making money in the future? Do you have too much debt? Do you have the right amount of debt? How are we dealing with money as a business as a whole? So there's three main sources that you can find this financial information, and there's three reports. The first is the income statement, which, kind of as it sounds, shows income from the company, right? Shows how much income you're making and that sort of thing. You've also got the balance sheet and the statement of cash flows. Now, if you've ever taken any finance classes, right? I have a finance degree that I just recently got, right? This is a lot of what they talk about is, hey, read income statements, read balance sheets, read statements of cash flow, and make up your mind, hey, is this good? Is this bad? Compare it to the others in the industry, compare it to the market, right? And then see how these numbers kind of stack up. But this is where sort of fundamental analysis comes from. And the whole point behind it is to say, hey, is this company in a good spot to continue growing over time so that if I invest, right, if I buy a piece of this company, is the value of that piece of the company that I own going to go up? And that's the whole idea behind fundamental analysis. And a lot of times, right, I talk about technicals, I look at charts, every day. I, trade a lot based on charts, but fundamental analysis, I think, is a really key thing when investing to understand and to at least do a little bit of to pair with technical analysis. So that's kind of the idea behind it. That's kind of the base. So let's go ahead and hop in and look at some of the terms. So, right, I talked about the balance sheet, income statement, and statement of cash flows. Now, those are long documents with a lot of information. So instead of reading those financial statements, a lot of investors, myself included, will often look at key numbers or financial ratios to make investment decisions. So here's some of the common ones that we're going to talk through that we're going to look at, and then I'm going to use some of these in my investment analysis. And so I'm going to talk through each one, and then we're going to go ahead and dive in. So we're going to look at market cap or EV. We're going to look at EBITDA. We're going to look at a PE ratio, a PEG ratio. We're going to look at the stock's beta. We're going to look at EPS. We're going to look at dividend yield, and then we're going to look at the company's revenue. So let's go ahead and start off with market cap and EV. So market cap or market capitalization represents the total value of a company's outstanding shares of stock, and it's calculated by multiplying the current market share price by the total number of outstanding shares. So let's say that there's 100 shares of XYZ company that I want to buy. Each share trades for $1. So then I know, right, 100 shares times $1 per share gives me a total, theoretical value of the company of $100. Now, in reality, it's usually more like each share is at, $45.83, and there's, 15,000 shares, right? Something like that. But it basically gives you a theoretical value of what the company should be worth at the current market price. EV is enterprise value. It's another way to measure the value of a company as a whole, but unlike market cap, it takes into account some of the debts and the cash holdings of a company. So people think of, market cap as like, hey, this is a kind of a quick and easy way to find out what is the company, theoretically worth. But then you can look at EV or enterprise value and say, hey, let's look at what the company's worth, but let's consider some other keys like debts and like how much cash the company has to say, hey, they've also got some cash, so that makes the company more valuable, and they've got some debts that they have to pay, so that means that the company's not worth as much. So just two different ways essentially to look at the value of a company as a whole. Next up, we've got EBITDA, and I just made a video about EBITDA this morning, but EBITDA, it stands for earnings before interest, taxes, depreciation, and amortization. Now, you might not know what depreciation or amortization is, right? The others are kind of common. Not really important for what we're talking about here. The basic idea of EBITDA is that it's a metric used to evaluate a company's operating performance before taking out some key expenses. Excuse me. EBITDA essentially helps investors understand how much money the company is making in their day-to-day operations, right? So how much are they actually earning? Before you take out interest, before you do taxes, before you look at depreciation, which is basically the over time falling of value of things like equipment for a construction company, right? Trucks will depreciate over time; they'll become less valuable, and amortization, right? Very similar. So these are the kinds of terms that, hey, these are key expenses that we want to look at earnings before considering those, because it just gives us a picture of how much money the company is making in the actual operations of the business. Now, next we've got PE ratio and PEG ratio. Now, these are really similar. So let's go through each one and hopefully you guys will see the difference. So the PE ratio is a price to earnings ratio. It's calculated by taking the current stock price and dividing it by the company's earnings per share. So basically, it shows you how much investors pay in ownership for each dollar that the company earns. So if you have a PE ratio of 2, right, 2 to 1, that means the price of the stock is you're going to pay $2 for every $1 that the company earns, right? So it's how much do you pay for each dollar the company actually makes. So that's PE ratio. PEG ratio takes your price to earnings, and then you divide that by the growth. So it's another valuation metric, but it takes into account the expected rate of growth of the company's earnings. So it basically looks at future value where the PE ratio says, hey, right now, this is how much people are willing to pay. And then the PE ratio says, yeah, this is how much you're willing to pay. But you're also going to talk about how much the stock is likely to grow, or the earnings of the company, rather, are likely to grow into the future. So it gives you that PE ratio with a add of future valuation. So you're looking into what's going to happen in the future, but you still want to know how much you're going to pay for earnings, and you're going to want to know how much those earnings are going to grow. So hopefully that makes sense. I know if this is your first time looking at these numbers, it can be kind of confusing, but hopefully that makes a little bit of sense. And keep in mind, right, I'm not trying to teach you guys a deep master course on this stuff right now. I'm just going, base high level so you understand the basics, and then we can talk about them as we look at some investment analysis here later this week and in the next 2 weeks. So our next term is beta. Beta is basically a measure of how much a change in the overall market, right, a change in the S&P or a change in the world market will cause a change in the particular stock you're looking at. It measures the volatility of the stock in relation to the volatility of the market as a whole. So let's say I want to buy XYZ company, right? And I know that XYZ company has a beta of 1. So every dollar that the stock moves up the overall market, I expect, or every, maybe not even dollar, every percent, right? So if the stock market moves up 1%, I know XYZ company with a beta of 1 is going to move up 1%. If my beta is, 1.2, then if the stock market moves up 1%, my stock is going to move up 1.2%. So hopefully that makes sense. It basically shows how much influence does the overall market movement have on this particular stock. That's beta. So next up, we got EPS. Now, EPS is earnings per share, right? Not GPS. Earnings per share. Earnings per share, basically, you take the company's net income, you take away their preferred dividends, because preferred dividends basically always get paid, and then you divide that number by the amount of shares outstanding. So basically, it shows you how much money the company is making per share of common stock. So for each, right, for each share of common stock, you're saying, hey, we're making this amount of money. So an EPS of $2 would tell you for every 1 share of stock, the company makes $2, right? So hopefully that makes sense. EPS, earnings per share. How much earnings is the company making divided by number of shares? Next up, we got dividend yield. Dividend yield, I love talking about because I am a huge fan of dividends. Dividend yield is basically a financial ratio that you find by taking the annual dividend per share divided by the stock price, right? It shows you the percentage return that you'll receive on dividends every year. Now, it's not guaranteed, but it's based on historical data. So, if I want to make I if I want a stock that pays me a dividend, then I want to know how much am I going to make from that dividend. So if you look at, there's a lot of stocks that pay like 1% dividend annually, or up to like a 4% dividend annually, and there's certainly higher ones than that. But let's say that I get a dividend yield, and I see the dividend yield is 4%, right? That means that I'm going to get a 4% return, every year by dividend payments, which really would usually look like 1% every quarter, which is kind of cool because it means it compounds faster. But dividend yield, it basically shows you how much am I going to make percentage wise compared to the current market price in dividend payments, right? So if I have a stock that's a $10 stock and they're paying me a 10% annual dividend, I know that for each share of stock I buy, I'm going to make $1 in that year. Oops. Where do we go? Ah, there we go. Okay. So hopefully that makes sense. That's dividend yield. And last up on our list of terms for today, I want to look at revenue. Revenue, right, is total income generated by a company from its core operations. Basically, revenue gives insight into sales performance and overall financial health of a company. Revenue becomes really useful, not so much as hey, we made $15 million this year, but when you measure them year over year or quarter over quarter, because then you can find trends that might continue into the future. So you might say, hey, we made $1 million in year one, year two, we made 5, year three, we made 10, year 4, we made 15, right? And you can find a pattern and say, okay, great. Year 5, we might make 20. And then we know, hey, if revenue is going up, then the value of the company is likely to go up with it. So revenue, yep, how much money you're making, and really helpful when it's kind of looked at year over year, month over month. Is revenue increasing? Is revenue decreasing? Are we able to sell our products and make some good money from that? So that's kind of our terms. That's what I've got for today. Now, keep an eye out for actually using these terms. I know I went over them kind of quick. Maybe not. If this was the first time you ever seen these terms, right? They might not have settled in yet, right? It took me probably, I don't know, 2-3 years of seeing these from time to time, and then I got into college, and then I started actually digging into it and saying, hey, I'm doing finance as my major, like let me look at revenues, let me chart them, let me graph them, let me look at EPS and dividend yield and all this other stuff. But I just wanted to talk about what the basic idea is of each of these, so that when I'm looking at them here in my investment analysis, you guys understand what I'm talking about, and it makes sense to you. So that's kind of what we got going on. So keep an eye out for those videos. I'm looking to do one of those either Wednesday or Friday here. I think I'm going to start analyzing my first potential investment stock. And until then, of course, happy trading and happy investing. We will see you guys in the next video.